and thanks for listening today. I wanted to just share a quick observation that I had this week when I was letting our dog outside. He's just a little dachshund, so he's pretty low to the ground, small little guy. But anyway, what I noticed was he went outside and he started barking, but while he was barking, his tail was between his legs. And I thought that's kind of different, that it seems almost contradictory. And in thinking about it, I thought, really what that might be is that he's frightened, tail between the leg, yet he is still going forward. He is still moving forward. He doesn't quite understand what's out there. A person's walking by. He realizes it looks like a human, like, myself and my wife are. But he still moved forward or toward it, even with his tail. So he was fearful, and he still moved forward. And I really want to tip my hat to people that actually get into their own policies after they've read a bit, watched a bit, and all of that, and that they might not understand it 100%, which is true for most people, and including myself. I continue to learn. And this is another video in response to a gentleman that didn't quite understand, and he certainly doesn't have his tail between his legs. He's moving ahead very courageously and asking these questions, even though he doesn't understand the whole picture yet. And again, I don't either. What I've come to realize was through this experience in the last, must be 3 weeks now, in conversing, going back and forth with this gentleman. He's not a client. He was a client of someone else's, and then he stopped the policy because he misunderstood something and he was upset about it, and he stopped. And then we met a few weeks ago, and we've been having this ongoing conversation periodically over the last 3 weeks. So courageous in that he is still moving forward, even though he doesn't quite understand everything that's going on. And what that's challenged me to do, which I'm so grateful for this, is that it actually has forced me to raise my standards in the way that I talk about this, and raised my floor, that I was being cavalier about my answers. And because I understand it, I understand it more now, just in the last 10 to 20 days, than I did before. And so with that, it has challenged me. And so the personal development and the personal growth that I've experienced just in the last few weeks has been tremendous. And with that, what I want to do is I have some notes here, and just say that really whatever it is that we're focusing on. So for myself, I was focusing on just getting a quicker answer out, and so I wasn't really thinking critically about being on the other side of these questions. So the personal growth is awesome. I'm always looking for that. And whatever I put my attention to is what I'm going to see. So if I raise my standards and focus on that and put my attention on that, that's what's going to come into my life. That's what I'm going to see. And the other stuff will just fall away. I won't necessarily see it. And so I'm literally seeking divine guidance with this, because This is much bigger than me. It certainly isn't about me. It's about this concept. And the divine guidance is alive. I hear it. It's in me. It's in all of us. But what I wanted to also do is, so one of the things, I'll just read off of this. This gentleman came away after watching a video that I had sent him, and I never quite saw it like this before, but when he said it, I said, oh yes, I get that. So my standards weren't that low. I understand it, so I don't pick up on those things so much because I'm not looking at it as critically, but he was. And yeah. So anyway, what he came away with this video was that the more you use the loans in your policy, the faster the cash grows, which is what I was always led to believe. And I respond saying, this is not true. It doesn't grow because of loans. So bear with me. It's an illusion that you'll see when you have loans and you're paying it back. It's an illusion if you don't really understand what's happening. It's like any other loan. You simply pay back the loan depending upon how long the loan is out, whether it's with the insurance company or a commercial bank down the road. You will pay some interest, be it simple or compound, whatever the terms were when you were ready to sign up for it. So when you're signing a contract with the insurance company, you should understand how these things are going to work because you're signing up for it. And it's long term. With a bank, you might pay off a loan in 5 years and then it's over. And then you start with another one and potentially and all of that. So whatever you agreed, the terms are. The way your pool of money grows, as Nelson Nash mentions in the book Becoming Your Own Banker, the pool are your policy or policies, plural, right? Multiple policies, multiple branches of your system. So while you're paying back the loan to the insurance company, it's multifaceted how that money is growing. It's not growing because you're paying back the loans. You've taken the loan against the general fund of the insurance company. It actually has nothing to do with your policy in that sense. And again, multifaceted. So there's a number of things going on. If you understand what they are, you understand what's happening. And you understand what you should do, right? First, the policy continues to grow while you have the loan with the insurance company, whether you're paying back the loan or not. This is due to continued premium payments, possible PUA payments you are willing and able to make, dividends that went to the PUA, on your anniversary, you're going to get the dividend. And if you've selected, which we encourage, select that the dividend moves over into buying up more life insurance in full. So it immediately becomes part of your policy. So possible PUA payments you're willing and able to make, and dividends from the PUA. And the value of time. You're moving closer and closer to, you could say you're moving closer and closer to death. You're moving closer and closer to the policy endowing and maturing and being paid in full. Aside from these mentioned above, if you decided to pay the loan back, which is highly recommended, the additional payments caused by your decision because you decided to pay yourself a higher interest rate, this is you paying back the loan, paying a higher interest rate, and you might say, why? Well, because you respect your policy or your banking system and the capital that is growing inside, more than you respect the commercial bank's capital, right? So now you also know full well you have taken it from the general fund of the insurance company, not from your policy. So your policy is continuing to grow every day because of the PUA, cash value, death benefit, all growing like a Swiss watch, if you will. So as far as the loan that you've taken, as a result of paying the higher interest rate that you had decided to do, you're paying back the insurance company faster than you would have if you had not given yourself that higher interest rate. So instead of it taking 36 payments, as a for instance, that's just an example, it only took 33 payments. But you're not going to stop with that. You're going to continue to make those last 3 payments. But where do they go? Well, they could possibly go into a savings account, money market, a CD. There's a number of, put it under your mattress, whatever you want to do. Again, this is a result of you paying a higher interest because you want to be an honest banker with yourself. An honest banker meaning honest with your policy, and instead of stopping at 33, you pay the 36 just like you would have at the lower interest rate with that commercial bank. You know, just as an example, the commercial bank, to see if I can make this really clear, the commercial bank might say, we're going to charge you 5%. All right. Okay, so instead of taking it from the commercial bank, you decide that you're going to pay yourself 10%. And the insurance company is charging you interest, right? So let's just say just say as an example, they're charging you 5%. You charge yourself 10%. That extra 5% is going to the principal, and you're paying it down faster, and that's why there's only 33 payments. Now you could, or you would, store these additional payments in an interest-bearing warehouse, as I mentioned before, in a CD, a savings account, money market, until it grows to a point where you decide to start another branch, aka another policy, for future growth of your controlled pool of capital. So here's where I got a little cavalier. He mentions that in your latest video at one point, you both, or I comment on how I've seen the cash value jump out as I make my policy, or when I pay back the loan. As I'm paying back the loan, I can see that it's jumping. But I don't necessarily go in and look at my policy every single day. Periodically I do. Now, if you went in every single day, you'd probably see why it's doing that, or unless you didn't understand what was really happening. So we didn't actually explain why it was growing like that. And really, the short of it is the things that I mentioned previously. And because I was cavalier in the previous video in talking about it jumping, I didn't explain or maybe even completely understand that really what's happening. I'll get back to this. There's 4 reasons for the cash value growth, and consequently the death benefit growth as well. And this is, again, you're paying back, whether you're paying back the loan or not, this is what's always happening, whether you're paying back the loan or not. And again, we recommend it. I recommend it. Highly recommend it. Continuing premium payments out of your pocket, right? You're sending it monthly, annually, whatever. Most of my clients are annual. Some are monthly, like myself. We send ours monthly. So it's the premium payments out of pocket, a possible PUA, which we pay our PUAs that we're allowed to. We've set it up before we sign these contracts, we set it up this way. So we pay the PUAs, and those PUAs are paying up the death benefit, extra life insurance that we're buying, which also affects cash value. The dividends are going to the PUA as well. So it's buying small pieces of life insurance and paying them up full too. And year after year after year, which is also time, year after year after year, time is the fourth leg on this that is pushing cash value and pushing death benefit upward. And that's why you see it in kind of a curve. In the first few years, first year, certainly it dips down, the money you're putting in, but shortly it starts to move right back up. It's happening right away, but you can't really see it in those first few years, but it is definitely coming back up. And then it exponentially goes up. So premium payments out of your pocket, the PUA payments, the extra room that you've created, designed into the policy, the dividends that you've asked to go and buy more PUA each year at the anniversary of your policy, and the value of time. Time value. The closer you get to endowing, the closer you get to death. That's also compressing the time and pushing the value of it up. So anyway, that's really and I mentioned too that there's certain words that mean certain things, and really it's not just the word, it's the definition that the intention is behind those words. So you can have a word that has, some people think of it this way, some people think of it that way, what it really means, this and this. So you might have multiple definitions, and the definitions are really important to understand really what's going on. You're building a pool house of capital that you have control and access to with certainty forever, so long as you continue to make those premium payments. And every time you do that, you're causing it to grow. So anyway, I had a tremendous growth spurt of understanding this more clearly, and I have been at it. I have had my license it'll be 5 years in April. I didn't find out about this or get it going for, 9 months. So anyway, for 4 years I've been doing this, and I thought I understood this, and I thought I was understanding it from people that I really respected, but I hear them saying, the interest inside this policy, the interest in the dividend is what's causing this to go up. And that's not what's happening. So it's been a tremendous growth week for me. So I don't want to do this overly too much, but I just want to say thank you to this gentleman that came forth with these questions and wouldn't let go until we got really clear about what's going on. So anyway, what I want to leave you with, is to listen to your intuitive self. I consider it my creator speaking to me intuitively. He, she, it lives in me, is part of me, and I am part of it. But to listen and be courageous, be tenacious, and do your due diligence. It's like a breath of fresh air. And pay attention to your focus, your intention, what you're looking at, what you're listening at, because that does affect what's going on up here. And personal growth, spiritual growth, enlightened growth is what I'm after. So anyway, with that, thank you so much for listening, and look forward to more questions and all that. They obviously are helpful, not just for you all, but for me as well. So keep them coming, and please do subscribe and like and share this video and others on the channel, and it's much appreciated. So thanks a lot, and have a good day. Until next time.